All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And today was wild. It was the first down day of August. And honestly, it was green until the last 20 minutes, which was wild. But we have to talk about the Fed pivot now. You finally got a little bit of a reality check. We have one more day till that non-farm jobs report and then even leading into a crazy week. But this one's a good one. Here's the first pretty picture. Beyond all the other reasons that we could say why the Fed isn't going to pivot, this one is showing how the Fed has never done like a quick pivot, or at least since the 2000s, unless the VIX has gone above 40. So I really like this one because I think it kind of puts it to rest. You could see it clearly, literally 2000, even 2020, like just look at it right there. It's pretty obvious. So until the fear really gets to that point, that may be the breaking point for the Fed. So that's the first thing we got to start with. But even then, actually, I have a lot. I got the plays. I got the recap. We made a bunch of trades. I actually got a little bit of a negative balance now, or now we're headed towards the downside with the futures. I mean, there is so much to talk about, but what we had today with OPEC, as well as this little rally, you see that we called it the, was it the truffle shuffle? I think it was the truffle shuffle. That's what we called it today. It was a very, very wild one, but oh man, wait till I tell you the reason for this. But let's start with OPEC. OPEC announced today that they are going to be cutting production by 2 million barrels. And now you should go watch the live. It was a very, very eye-opening speech by OPEC. He was saying, please do not misreport this. But beyond that, though, the main thing that the head of OPEC was highlighting, it was a chart saying how oil and crude is price stability and how that is their objective. But the chart was showing how Brent crude and oil hasn't moved more than like 10% since the start of March and when we had the invasion and all of that, or even the beginning of the year. But he showed all the other commodities and how coal and even electricity and just all the other prices going up a lot more. And he was trying to say, hey, we're all about price stability, right? So a lot of people were confused because now it's being tied in. Is OPEC supporting Russia, this and that? Even the White House, they did not like it at all. But here's the thing. It's very, very simple, and it's really not even that political. What OPEC is saying, hey, we try to have price stability. We have experience. We look ahead, and we are trying to be proactive and preemptive. And we see that demand is going down. They brought up that the Fed is raising rates. They're like, what do you think is going to happen? But they're saying they want to be proactive in terms of a future downturn in demand to preserve the energy oil markets, right? That's why they're saying they're doing it, and they want to do it now. They're saying it has nothing to do with Russia. They're saying, unfortunately, the timing's bad, and now that's the opposite. Not only can you tie it into Russia, it is also now winter. And pretty much what the West is saying, Europe, United States, they're saying, can you do it at another time? That's it. That's all. You know, regardless, it's either can you do it at another time, or are you doing it to help someone else at this point? Coming into winter and how things are, it is just inopportune. So why am I trying to highlight this? One, it is going to affect oil markets, but the real main point, please, I hope you understand me on this. I want you guys to see you are watching the world kind of pull apart in terms of both policy and like kind of working together with policy, whether it's the UN calling out the Fed, people saying maybe the Fed needs to slow down, the calls for the pivot. Now you're having a disagreement and dislocation in policies in pretty much countries saying, hey, we got to do our own thing. This is what we're going to do. We got to do our own thing. And that's pretty much what it is. Even the United States releasing the SPR, we had to do our own thing, respond to what it was. So the whole point is now we're starting to watch a lot of disagreement as the currencies and everything else is going crazy. Now, that's the first part. That was OPEC, but now number two, this one is absolutely, these aren't even the keys, but the keys are going to be short. But the truffle shuffle, bro, why did we have this rally? Again, we were saying all day, I was like, man, this one was a weird one. This one was a weird one. I kept saying that, but thankfully we have an explanation. I have to show you all of this. Again, this is just the source of it all. People are talking about it. It was a Wells Fargo strategist, and what he was saying occurred at that time. Somebody bought 20,000 S&P 500 calls calls for October with a strike price of 4,500 and 14,000 bullish contracts for March at 4,300, and then they sold 4,800 calls at January. It's this crazy spread, and they sold these out the monies and bought these pretty much as you could read. I'm not going to read all of it, but it's saying they can make a lot, and they're expecting the market to go up. It's about a $30 million trade, and they're saying this caused just some sort of gamma squeeze and rebalancing, and they said it was just very imbalanced, but that trade caused a lot of momentum. Now, this is why I wanted to include it all, because not everybody agrees, and that's what it says there below. The co-head of derivatives at Susquehanna, he says, well, not really. I don't think that happened. He said the dollar was going down, as well as an upward revision of the Atlanta Fed occurred at the same time. So he was saying the delta component of the trade wasn't that huge, and it shouldn't have had a big impact. So you get both views, and that's what I want you to see, but it was a wild move. And again, we went from positive last 2 days. We started dropping, and it was going through those levels pretty easily, and then all of a sudden it went crazy. So we got a lot. I got the plays, everything else. You gotta like the video. That would be very, very helpful, and we're gonna see you in the morning. youtube.com/thestockmarket. I don't know. Run it, baby.
Working to the couch, it's the 2020 election. Live in the head, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, Chad. I know we took a lot of time on that, but like I said, this one is going to be short. Like we said, today was the first down day, but it was the first day that the dollar actually has gone up in October. So remember, the last couple of days, the pound was rebounding, the yen did nothing, and I want you to remember that and come to your own conclusion. But all of those other things in the week before that were getting clobbered, they had that rebound. We saw the dollar relief, again, a little bit in the bonds as well too, but today was kind of the first day of that unwinding. So that was just calming down. It wasn't as if there was like bad news. So even the reason down, there wasn't really a reason to be down. Again, we were down like 1.5%, even 2% at one point. We were really, really like selling off. And now we did have data, the ADP jobs report, it was good, but it didn't really hit the same. And it's because people are saying the ADP is not as reliable. And this is a new ADP. They've recently updated a little bit of the formula there. So they were just pretty much saying it doesn't really give you too much insight, and they're waiting for the non-farm. So that didn't cause a reaction. But then the ISM services, or the PMI, one of those, but it was related to services, inflation expectations dropped within them, but they're good. And if you haven't noticed, this whole week, not only have we had that jobs data that was doing worse than expected, which was good for the market, but manufacturing data was bad, but service data was good. So that's not good for the whole inflation situation. Again, service inflation running at this time, that's the second leg that people do not like. So besides that little crazy rally throughout the day, it was kind of nothing. The bonds did sell off, and again, the dollar was up 1% today, but this was kind of the cool off from the cool off of the last 2 days, if that makes any sense. But that is your first key, and this is your second and final key. Let's keep it simple, baby. Tomorrow is your final day to trade. And what I mean by that, the jobs report is on Friday. It's going to come out before the bell. So by the end of the day tomorrow, you need to be locked in, especially if it's options. If you're on futures, it's going to be a little bit different. But what I'm trying to say, what we've been saying all this week, even with this May 9th, dude, it's playing out very well. That's why depending on how tomorrow is, it will tell a lot. But wherever we end tomorrow, that will be the final move. It doesn't really matter whether it's lower or higher, unless it breaks super key levels and is fueled by external news or the pound or the currencies, you know what I'm saying? Where like something actually breaks, then tomorrow's price doesn't really matter. So don't fall in love with it. Don't get too pissed off or too happy about it. But right in the morning, an hour before the bell, that non-farms, it's going to come out, and that will set the trajectory for the day, and that's going to be our setup in the next week. So I hope you're ready. Be smart, and let us get into the plays. So, right off the bat, I got 3 different stocks that I'm looking at. I made a couple of trades. We did good on the day trades. One of them I'm still holding. I added to the MNQ to the downside. I got trapped on that one. It wasn't bad, and thankfully I went with the micros, but still could have been better, but I'm cool with holding it. Again, we're going to be playing that in the Friday, but we'll go over those. But as far as the 3 plays now, number 1, baby, XLF. I really like this one, and it's because the banks have had probably one of the biggest bounces bounces since all of this occurred. Remember, we've been saying it all of September. Watch the banks, watch the banks. If Powell, if Jackson Hole, the banks had that leading force, and they did have a very, very big bounce compared to a lot of things. So I like it, but if we start to see some downside, that's a lot of meat on the bone, and there's a lot of individual names. Again, I still have that old Wells Fargo short, so I like it, but also in the same respect, if they show strength, it could kind of be a leading indicator. So any bounce or anything, we'll find out. But like I'm saying, the data is what is going to provide the conviction. And also, too, maybe I should add this. Friday's data is important, but you have minutes and CPI and then earnings next week and all of that. It's just crazy. It's crazy. But that is play number 1, XLF. And play number 2, I think some of you are going to like this one, HUSA and Indo. So if oil starts popping again, or it has like really big spikes, if there's some days where like oil makes a 4 or 5% candle, you know, something really, really crazy, these are the ones to look at. I think these are good to trade. Would I own them as your oil play? I'm going to hug you and love you. No, these aren't the ones I really want to own. Again, you have so many good quality ones, but to trade, we've seen this. We noticed it last time. We made some flips, but I like it, and this is what I'm saying now. These are good plays to kind of use as like a volatility of oil if you're already in plays or you're waiting for one, right? So like imagine all the oil plays. We had a window to grab the BP. I should have grabbed some more. You see how those came back, but now we're riding them. I don't want to buy them when we're up. Well, depending on the oil moves, you might be able to trade some of these. Again, vice versa. If you kind of just missed out on it and you're seeing some volatility, you could get in there. But like I'm saying, just don't fall in love with these. These ones are more to trade. Again, just look at their charts. They pop up and then they come down. It's literally, I view them as like a VIX of oil. You could even trade SCO as an option as well. Don't forget about that. But that is play number 2. And then finally, play number 3, baby. Arch and BTU. We brought this up beginning of the week. It was down. It's up like I think 7-10% even from when we were down on it. He said keep an eye on it. Remember BTU, that's another one. I still have the ARLPs. Those are up from the beginning of the year. That's like one of the very few options. It's up 200%. We bought it at the beginning of the year, but I like the coal plays. I'm about to go positive now on Arch, and just in general with anything with oil, I think the coal can move good, and the fact that I'm going positive on it, that means there's a lot more runway, and I think these might be able to move, and they've moved beneath the surface a lot better. So keep your eyes on them. I don't know if I'm going to buy more, but if I am going to buy more, I'm probably going to go for BTU since I already have ARLP. My Arch are going positive, so it's like if I really want to go crazy, BTU is the one that we saw with value. That's like the last leg of it. Again, we did that with the options, and we got clapped on one of those before, so keep that in mind. But those are the main plays. As far as everything else, let's start with the trades for the day. I did trade a little bit more, and again, it was active. It wasn't as pinned, and I was pleasantly surprised, but I started off in the morning. Actually, it was pre-market at like 5. I wanted to see how things were trading, so I threw in like 1 share of ACAM and another, and again, it's for the buyout. I do want to buy more, but I was like, it was weird because I was noticing how the trade blocks weren't coming in, so I was like, let me see, let me buy one, but my trades weren't showing up, and then it would show up at 100. It was just a weird little test, but you see it there. It showed up, and then throughout the day, we started selling off a little bit. I had a little bit more profit in the Apple, not as much as the day before. I closed out of that one, those 100 shares. I got like $300 net profit. Then Tesla kept dropping. Remember, we shorted that yesterday. I covered that. I think I made like $290 profit, and then add that to the 150 from the day before. So we've been good on Tesla this week. And then I got back to a little bit of the trades. I shorted, and this one was crazy. All of these, and we're going to talk about it with the holdings. We're going to address the elephant in the room. But I shorted this at 3761, -1, and then I covered at 3756. It was like 6 points. I don't know how much it was, and then I went long 3738. That was the Bradley Frizzle peach bounce. I only made like 30 bucks on it, and just look at that entry price. Oh my gosh, that's what I was saying, man. And then I shorted it at the top. I made another $200, but the peach was the bottom. The short was literally the top. If we held these would have been crazy. But I realized like 475, I think, on the ES today. So not bad at all. And again, still holding that. And then I made that other MNQ. I added that to the one I was down on from 2 days ago. So now that one's working against me. But we'll get to the shares that I'm holding now. So here they are. There's a couple again not showing up. There's like the NVIDIA at the bottom. That's like the last upside play that I'm holding besides the ACAM. And this is what I was saying, after grabbing that MNQ, you see I'm down 1,300 now. I added to it. I was only down 300 bucks in the morning when it came back, and that one I got kind of trapped a little bit. But after taking the Apple, thankfully I closed the Tesla. I am leaned a little bit more to the downside now. But here's the elephant in the room, and this is something, if I notice it, and this is what it is. You see me cutting out early a lot, and the problem with some of these futures, and this is where I need to find the balance, but I also don't want to mess up the momentum, because regardless, we have closed these out very, very good. It has treated us very well, but you'll probably notice on some of these plays, I'm taking way more risk to cut out so early. Literally, I'm either drawing down 500 bucks. Sometimes you've seen 3,000. And yeah, we came back. You saw me realize later, I think it was this Monday, we realized the 1,500 on it. But the whole idea is, yes, on some of these, this is why you got to be careful. And if I didn't have some of these balances, or if I just wasn't really to kind of just willing to ride it again, I have an idea and I think we're going to play with it. And I'm cool to be at the mercy of the data or even give it a little bit of time. But that is something that I want to work on here to make these a little better, because, dude, go look at today's entries and exits. I mean, we made money. I walked away with like 500 bucks realized. Great day just on other trades, not including anything. Realize it, put it in the bank. But, dude, both of those trades to the upside, that could have been a $10,000 day on those same exact trades, you know, doing something a little different. So that's what we're going to work on. That's something to keep in mind. I don't know, maybe you saw it. That's why I'm like elephant in the room. You can learn from it. I'm sharing it with you. We'll see what happens, but you'll see there's the ES. This one, I'm still just holding the options. Again, we realized that, so holding 750 open up on the option. And again, think about that option trade that got executed today. That 30 million trade, they're saying move the market. That's kind of the option that I'm holding. I actually believe it's at the same price of 4,200, 4,300. I actually got a little bit more time than that guy did, but so I've said this is like my insurance to the upside in a very, very weird way. So glad I still have those, and they're holding. Still in the micro ESs. They went up a little. The MNQ down. The MYM, again, the values didn't really change much from yesterday. ACAM came down a lot. That one sucked, but again, still holding that for the buyout. But really depends. I need this for my upside, but again, I'm not too in love with it, but we are trying to wait for an external. But like I'm thinking, give it some time, at least until even the data too. I like how it has held up, but we did draw down a little on that. Then Arch came back on that, and then Netflix, that old play, we brought this up again, man. I don't know if I want, yeah, let me just show you. This is the same Netflix short from before. Actually, I was up 90 bucks on it today. I think the most we were up on it was like 120. Again, Netflix was kind of holding up very good, but this is that same trade. Same trade from the example when I was saying compare it to options, those 10 shares, still a little up on it, but take a look. Here's another week. Another week. Again, go look at all the Octobers. Go look at whatever time frame you want. Just go take a look and compare it to September 16th. But here's another contract in the money. October 7th, 245 put. So roughly $10 in the money by $10. And that option is going for $9.50 today. But on the day we opened this transaction, that option was going for $20 all the way down to $15. At any point. So even if you put like $1,700 for it, you're still down about 700 bucks or like 50%. Again, you're $10 in the money, but still in that Netflix, there's that one. And again, the Nvidia, that one, I'm still long on that and up. We're up like 490 or something. So that one's good. The pound came back a little bit. So still rocking with that. And then that's pretty much it. But as far as everything else, after OPEC, just watch energy, watch oil, the UNG. We talked a lot about it today. Gonna be seeing, I think tomorrow should be a little bit chiller. Really watch those ranges, and we're going to go over them. I think we'll get opportunities, but it's going to be all about Friday. I'm going to give you that update, and I hope you're ready for it. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got to get hungry. There's a difference between even being starving and hungry. You could be starving and still let life take the hunger out of you. Stop playing with me, baby. It's game time. You got to get hungry right now. That's it. I want to be around people who want to be hungry, but this is the moment. And remember, hunger isn't greed. Don't be fueled by greed. Be hunger. Let the hunger drive you to see something where you want some more, you know, get some more out of it, baby. But let's go. If you already made it this far, I think naturally, whether you say it or not, even if you're not confident, if you already made it this far, I think there's something deep down, something subconscious not being said, saying, well, I think you want it, and the hunger's there. there. So let it out, baby. It's game time. I'm going to see you in the morning. I'll see you for the end of the week. God willing, I keep seeing you. You know what I'm saying? But let's go. Peak volatility, Chadadonia, and get ready for the end of the year. It's almost there, and the Chad loves you. I love you. Finger to the sky loves. Everybody love you, bro. That's it. Just vibe. You got to vibe, baby. Okay. Are you ready? I'm excited, if you couldn't tell. All right. I'm going to go. I don't know what I'm going to do. I'm going to go to the gym, and then I'm going to go after the gym. When you see, I'm going to check my email. You want to tie you? Oh, here, I got something to show you. Hold on. Man, I don't know. You see that? Yeah, bro. The code, baby. Stop playing with me.